Hello everyone, welcome back. This is Sangeeta Randhawa and today we are going to discuss about central bank. So central bank is the apex organization which is responsible to manage the banking system of an entire economy. Okay, so this is also the currency issuing or note issuing authority that controls the supply of an money supply of an economy. So RBI, Reserve Bank of India, is a central bank of India which was established under Reserve Bank of India at 1934 and started functioning on 1st April 1935. The major objective of central bank is to ensure the monetary stability in an economy and to operate the currency and credit system to advantage the economy. And there are various functions which are performed by the central bank, like this is currency issuing authority. So the central bank is responsible to issue the currency notes on behalf of government of that country, and the currency notes issued by the central bank are unlimited legal tender money. Now unlimited legal tender money refers to that legal tender money which can be used to pay off the debts of any amount. For example, if someone has to pay an amount of rupees 1 lakh or 10 lakh, then the currency notes are used to pay that amount, not coins. That is why your currency notes are unlimited legal tender money and your coins are limited legal tender money, because their scope is limited. Then central bank also act as a banker to government. So as a banker to government, it has three roles to play. First as a banker, second as an agent, and third as an advisor. So as a banker, central bank manages all the accounts of the government. As an agent, it purchases and sells securities on behalf of government, and as an advisor, it formulates the policies to control the money supply in an economy. Then it is a banker's bank and it has supervisory role as well. So as a banker's bank, central bank accepts deposits from commercial bank and offer loans to them. And in its supervisory role, it ensures that all commercial banks in an economy should comply to its directives, particularly CRR and SLR. Then it is a lender of last resort, which means that if any commercial bank fails to get financial accommodation from anywhere, then it approaches central bank as its last option, and central bank offer loans to them against the securities, and it is done in order to ensure that the banking system of an economy do not suffer any losses. So central bank is also act as a custodian of foreign exchange reserve. It also exercises managed floating in order to ensure the stability of exchange rate in international money market. So then this central bank act as a clearinghouse function. For example, there are two banks in an economy, Bank A and Bank B, and both of these banks have their accounts with RBI, central bank. So Bank A receives a check of rupees 20,000 drawn on Bank B, and Bank B receives check of rupees 25,000 drawn on Bank A. So both of these checks were cleared through their accounts with the RBI. It helps to avoid the transfer of cash between the banks and to reduce the requirement of cash. So this clearing housing facility is provided to all the banks in an economy at one place. Then last comes the control of credit, and this is the most important function of central bank. The central bank is to control the money supply in an economy, and it implies that increase or decrease in money supply by regulating the credit creation by commercial bank. And this is done to control the money supply during inflation and deflation. So during inflation, the money supply decreases, and during inflation, money supply increases. And for this control of money supply in an economy, monetary policy is framed, which is the most important policy, which includes two instruments, quantitative and qualitative instruments. So these are the functions of central bank. So I tried to explain this topic in a simple language. I hope that you like this video. And that's all for today. Thank you and be safe.